Ever wondered how MDC Holdings and Sekisui House are performing in today's volatile market? Well, buckle up, because we're about to embark on a fascinating journey into the world of stock markets and real estate investment. Let's set the stage first. The current state of the stock market could be best described as a roller coaster ride. We're seeing some of the most dramatic shifts in market trends, with stocks swinging between highs and lows like never before. And amidst this whirlwind, two companies have caught the eye of investors worldwide: MDC Holdings and Sekisui House. So who are these players? MDC Holdings, listed on the NYSE, is an American home construction company that has been creating value for its shareholders for over 4 decades. On the other side of the globe, we have Sekisui House, a Japanese juggernaut in residential construction. These companies are not just about bricks and mortar. They represent opportunities, growth, and most importantly, potential returns on investment. Now, onto some recent news updates. MDC Holdings has been making headlines with its robust growth strategy and impressive financial performance. Meanwhile, Sekisui House, with its innovative approach to housing and real estate, is redefining the industry landscape in Japan and beyond. These updates are not just mere news articles, they are signals, indications of where these companies are headed and what it could mean for those who have their money riding on these stocks. Why are these companies of interest, you might ask? Well, the answer lies in their resilience and potential. Despite the market's unpredictability, both MDC Holdings and Sekisui House have displayed an ability to adapt and thrive. They have shown that they're not just surviving the storm, but learning to dance in the rain. Now that we've established a brief overview, let's delve deeper. Because, as we all know, the devil is in the details, and those details could be the key to unlocking profitable investment opportunities. So, stay tuned as we take a closer look at MDC Holdings and Sekisui House in the upcoming segments. First up, let's examine MDC Holdings, a prominent player in the NYSE. This Denver-based company is well known for its prowess in the home building and financial services sectors, an interesting blend that has helped it navigate the ebb and flow of market trends. When it comes to strengths, MDC Holdings' diversified business model tops the list. The company's home building operations span across 10 states, which not only mitigates regional economic risks, but also provides ample opportunities for growth. Its financial services arm, offering mortgage loans and insurance products, complements the home building business, creating a well-rounded portfolio. However, like any company, MDC Holdings isn't without its weaknesses. The company's reliance on the housing market makes it susceptible to economic downturns and changes in interest rates. This vulnerability was evident during the housing market collapse of 2008, when the company faced significant challenges. Recent years have brought interesting developments for MDC Holdings. In early 2023, the company entered into a strategic alliance with Sekisui House, a leading Japanese home builder. This move is seen as an opportunity to expand its footprint and tap into innovative home building techniques. Yet, threats loom large on the horizon. The company's dependence on a stable economy and favorable housing market conditions could spell trouble in the face of potential economic downturns. Plus, the ever-present risk of natural disasters in some of its operational regions adds another layer of uncertainty. That said, MDC Holdings has demonstrated resilience over the years. It has weathered economic storms and managed to come out stronger, a testament to its strong management and strategic vision. So, that's MDC Holdings for you, a company with its own set of challenges and opportunities. Next, let's turn our attention to Sekisui House, a leading name in the Japanese market. Established in the early 60s, Sekisui House has grown to become Japan's largest home builder and housing corporation, with a strong presence in over 20 countries. Their strengths lie in their innovative, environmentally friendly designs, and their commitment to providing high-quality homes. This dedication to innovation and sustainability has seen Sekisui House become a market leader in the construction of net-zero energy houses, a key selling point in today's environmentally conscious world. However, like any company, Sekisui House has its share of weaknesses. Despite their global presence, they are heavily reliant on the domestic Japanese market, which has been experiencing stagnation due to the country's declining population. This over-reliance on a single market could pose a risk to their long-term growth. But it's not all doom and gloom. Sekisui House also has significant opportunities for expansion. Their commitment to green building aligns perfectly with global trends towards sustainability and energy efficiency. This puts them in an excellent position to capitalize on increasing demand for eco-friendly homes. On the threat front, Sekisui House faces stiff competition from other housing corporations both domestically and internationally. Additionally, fluctuations in the global economy and changes in government regulations could also impact their operations. In terms of recent changes, Sekisui House has been actively pursuing overseas expansion, with a particular focus on the United States and Australia. This move is part of a broader strategy to diversify their revenue sources and reduce their dependence on the Japanese market. In summary, while Sekisui House faces certain challenges, their commitment to innovation, their strong brand reputation, and their strategic moves to diversify internationally position them well for future growth. And there you have it. Sekisui House, a company navigating its own path in the market. Now that we have a clear picture of both companies, how do they stack up as investment prospects? Let's start with MDC Holdings. This company has a solid foothold in the American housing market, and their recent financials show a strong position. With the current trend of urbanization and the rising demand for housing, MDC Holdings' growth potential is quite compelling. However, one must bear in mind the cyclical nature of the real estate business. Downturns in the economy could significantly impact their performance. Therefore, the risk profile of MDC Holdings is relatively high, but the potential return on investment could be substantial for those who can weather the storm. On the other hand, we have Sekisui House, a titan in the Japanese housing industry. The company has a robust market position, with a diverse portfolio that ranges from single-family homes to high-rise condominiums. Their commitment to sustainable development and green building practices also positions them well for future growth. However, Japan's aging population and sluggish economic growth may limit the company's expansion potential. In terms of risk, Sekisui House presents a lower profile compared to MDC Holdings. Their return on investment may not be as high, but it could be more stable over the long run. So, should you put your money on the American stallion or the Japanese workhorse? That depends on your investment goals and risk tolerance. If you're a risk taker looking for high growth, MDC Holdings could be your bet. But if you prefer a more stable, long-term investment, Sekisui House might be the better choice. Remember, investing is not about picking winners or losers. It's about aligning your financial decisions with your personal goals and risk appetite. It's about understanding the nuances of each company and how they fit into your overall investment strategy. As we can see, both companies present unique investment opportunities and challenges. So, where does all this leave us? We've journeyed together through the financial landscapes of two remarkable companies, MDC Holdings and Sekisui House. Let's circle back and recap what we've discovered. MDC Holdings, that powerhouse of American residential construction, has proven its mettle time and time again. Its strengths lie in its robust financial health, strategic acquisitions, and its knack for delivering quality homes that appeal to a broad market. However, we can't overlook the challenges. The cyclical nature of the housing market and its exposure to economic fluctuations can pose threats. On the other end, we have Sekisui House, Japan's leading home builder. Its diversified business model, global footprint, and commitment to sustainable development are all significant strengths. Yet it too has its weaknesses, such as its dependence on the domestic Japanese market and the challenges of navigating different regulatory environments in the countries it operates. Now, when it comes to investment prospects, both companies present compelling cases. MDC Holdings' steady growth and strong financials make it a promising candidate for those seeking stability. Sekisui House, with its commitment to innovation and global expansion, could be an exciting prospect for those with a more adventurous investment spirit. However, it's important to remember that investing isn't a one-size-fits-all game. What works for one investor may not work for another. Both MDC Holdings and Sekisui House have their unique strengths and weaknesses. The key is to understand these aspects, align them with your own investment goals, and weigh the potential risks against the potential rewards. Whether you choose MDC Holdings, Sekisui House, or perhaps both, remember, every investment comes with its own set of risks and rewards. Always do your own research and make informed decisions. Until next time, keep exploring the market.